Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Klevit here, the host of the System Simplified podcast, where I feature top founders, entrepreneurs, and thought leaders about systematizing a business. And today's episode is being brought to you by Business Success Consulting Group, where we create, document, optimize, and implement processes and procedures so businesses can grow and thrive. And today's guest is Burt Copeland. Hi, Burt.
Adi, how are you?
Good. So happy to have you on the podcast.
I'm delighted to have been invited, so thank you very much.
You're very welcome. And we're going to discuss processes, and we're going to discuss financial processes, your CFO work, and why processes are important for the success and the survival, but not just bare survival, like really thriving, right, for every business.
Oh, absolutely, because you and I are on the same page as far as the importance of solid processes.
Absolutely. All right, well, here's your bio first. Let's introduce you correctly. So you're the founder of New Life CFO service, and it's a firm with 18 professionals and over 900 million in revenues under management, which is
right.
Big deal. It's almost $1 billion. It's amazing. And you speak frequently with CEO groups on understanding your financials to drive performance and value of a company in preparation of an exit. And those are definitely subjects that our listeners will be very interested in hearing more about. You've been married for 31 years. That is, congratulations. Amazing. My husband and I are almost there. So you are 3 years ahead of us, but that's very well done. And you're married to a strong woman who keeps you out of trouble. And you're a dad of 2 great kids who are a joy to be around, which is amazing. Family values and having a great family is very, very important. And, I would love to hear from you about your personal story, the why behind why you created New Life CFO. And you're going to talk also about the collapse of your prior company that led to the commitment to serve CEOs to avoid financial pitfalls. You have a great story. You told me that when we had our phone call, and I go like, you know what? You persevered through so much, and you took something that could have been a complete failure, but with your attitude, with your intelligence, with your drive, you totally turned it around. And now you're sharing that knowledge with other CEOs, which is very, very important.
Oh, thank you.
Yeah. So Burt, let's start with that story. Tell us the story of your career before starting your company and what happened.
It may not be the best story as far as I'm a CFO to tell, but it is the story that led me.
It is the story.
Right. So, all my life I've been in accounting and financial management. I came out of school, went into public accounting, became a CPA, got my master's, have been from public accounting into Fortune 50 strategic planning to smaller enterprises, always within the financial management, but with one caveat. So always within operational financial management. Like, how do you help the people that are actually doing the work understand how to make more of the work they're doing? Because I think I just move more stuff. Well, yes, but if you move more stuff differently, you make more money. So I've always loved that. And as that rolls forward, in the year 2000, I found myself as the CFO of a $65 million construction company. And I love construction. It's so great to go to a job site and actually see things that are created versus just my world. It's all soft intellectual property versus hard assets that are being created. So I love the industry. So started out there as a CFO. 3 years into that, I was promoted to the president of that company. And 2 more years into that, I bought the North Texas operations from the parent. And that was about 7 out of the 65 million. And then within 3 years, I was blessed with a great team. We grew that to a run rate of right at 30 million a year. So that was tremendous growth because I'm in a hard bid world with major GCs. So that growth was really fantastic. And indeed, if you're rolling with me, we're now into the year 2008. So in 2008, my revenues for March were just a little bit over $2 million. And that's also around the time that Lehman Brothers, Countrywide, and everybody else just started going sideways badly. So what happened in March, at the end of March, is the banks told the general contractors, stop all work on these buildings until we can, quote, assess the collateral value. So all work stopped, all my work stopped. So Adee, take a guess at what you think my revenues were in April of 2008. From 2 million to what?
Zero.
Not quite zero, 325,000.
Ooh, well, that's close to zero. I mean, at that point is like pennies. Okay.
I was heading towards zero so fast it was scary. It was like my plane had, the props had stopped. So it's a 80, almost like an 86% drop in revenue in 4 weeks. And that lasted for 3 months, at least 3 months. Now the problem with D is my break-even point was well over 800,000 because I had like 80 employees doing this work. So I lost several million hard cash, profits, everything within 75 days. By the end of the year, for me, I'd lost a small fortune. I was really blessed though, because I had great people and I had experience in doing a lot of turnarounds for my life in public accounting. And so we got the company repositioned. 2009 was my best year ever, but I had this epiphany. It's like, oh my God, if I can step in this bear trap of financial collapse and barely get out, what about the average entrepreneur? Susie's a beast in the sales channel. Bob built a better mousetrap, but they don't know how to manage the financial performance and risks of their companies. And so I became very passionate about that needs to be my next. I can't go and serve that purpose inside my own company. So I sold the company to a strategic, bounced around for a while trying to figure out how do I serve entrepreneurs as an outsourced CFO, and ultimately just decided to create my own company because nobody that I talked to had the same vision. And so in Q4 of 2013, I started New Life CFO with me and my dining room table.
Wow. What was the purpose when you started New Life CFO? What did you want to accomplish?
Most importantly is to take care of the entrepreneurs and their families, because whether people realize it or not, the average entrepreneur has invested 65 to 85% of their total net worth is in that company. And then the ripple effect of that, Adee, and then we take this very seriously, as do most entrepreneurs, is their responsibility to take care of all those families that rely on their decision-making processes to make sure that financial stability maintains within that company. And even within New Life, we challenge our CFOs. It's like every time you walk in that boardroom, you need to know that you're there for a purpose. And a big part of that purpose is to take care of the people who are not in the room, right? Because now you're talking about dozens, if not hundreds of families that are dependent upon wise financial discernment as that company moves forward. And so that's that overall bigger purpose that I could not find if I work for somebody else. It allows me to also do pro bono work when I see somebody that's really deep in a bear trap and they couldn't afford to pay me if their life depended on it. But we dive in and we do 2 or 3 of those every year.
That's amazing. That's amazing. Also shows, your values, what's important for you and how much you care. So that's very well done.
Well, we have an overall premise of if I serve you well, I will be served.
That's right.
So, we think about that with our market partners. How do we make a Vistage chair more valuable to his members? Not just a Vistage chair, hey, can you introduce me to somebody? No, how do I make you more valuable to your members? So we do a lot of behind the scenes work with Vistage chairs about helping them to understand what financial questions you need to ask during your one-on-ones.
Yeah.
And other things like that.
Yeah, so let's dive into it. So we have entrepreneurs that are listening to us right now, And they're probably curious about what is, from your experience, when you manage your finances as an entrepreneur, what are the most important points to look at?
That's always a great question. Yesterday, I did a presentation to a bunch of entrepreneurs, and a very similar question came up that I'll share with you as a starting point, and then we'll get more into some of the financial stuff.
Yeah.
Gentleman asked, what do you see are the three or four things that a CEO is blinded to or really does not do well?
Mm-hmm.
And so we dove into that and we said, okay, number one is you're too busy talking about the positives of your own business. You're too busy with your own elevator speech. You're too busy being the chief promotion officer of your own company. And by doing so, it puts blinders on you about where the real faults, issues, and cracks in the mortar. So you need to always back up and says, other than me promoting my own business, where am I doing a true risk assessment of my own business? Because playing offense all the time and ignoring your defense is a really dangerous game.
It's very interesting because I heard it, and you're right. I mean, that does happen. And as a business owner, you have to be humble. You have to be humble enough in order to actually look at what is happening as opposed to pretending that it is something else.
Yeah, and I've joked around with some of my clients and says, hey, look, here's the problem. You're writing, reading, and believing all your own press clippings. That's not necessarily a good thing. The other thing that I told this guy is like, hey, look, not all revenue is created equally. More revenue is not the answer for a couple of reasons. Number one, there are different revenues that represent different risk profiles and your ability to execute. Like in my old business in construction, it's a project-based company. I had to rebuild my revenues every year from scratch every January. So understanding what is the profile of your revenues and the sustainability of those margins underneath creates a different mindset about which one of these revenue lines you're going to invest in.
Mm-hmm.
Here's the other thing where you and I are very equally yoked. People will want to drive more revenue without understanding how strong is their foundation to digest that revenue.
Mm-hmm.
Right? And I told you early on, I love processes because processes is the foundation of a building. And if you just want to put more bricks and mortar on a weak foundation, don't be surprised if it collapses.
Right.
The other thing that I'll challenge people is there's two more. Number one, on the next one is do you understand what's really driving your profitability? So the example that we gave is a company that had shown crazy improvements, right? And I said, but there's one number on this chart of year-over-year improvements that I can't stand. Can you find the one number? And this company had gone from a loss to a tremendous profit of like, they went from a modest loss to profits of like $700,000-800,000, which looked great year over year. I said, but what's the one number on this chart that I can't stand? And they finally got it right. And it's that even with the improvements, profitability was only 2%. I said, 2%, you are walking a fine line of complete failure. I mean, visualize that you're walking along a cliff and one or two bad steps and you're going to fall off.
Mm-hmm.
And so what I do for them, Adia, says, here's what you need to do. Turn your income statement upside down. Focus about you're going to change that 2% and recreate your business and change the 2% to 8 to 10 to 12. And you can change anything in the world except for one thing, Adi. You cannot increase volume. You have to solve this problem for the business that you are right now. And then the last things that I said that most CEOs mess up on is they forget about their balance sheet. So if you're growing, you need a really strong balance sheet to feed that growth.
Right.
You need to know what your liquidity is. You need to understand what's going right or wrong in your balance sheet. Because if your balance sheet is wrong, your income statement's wrong. Right. And then going back to that 2%. If you have a 2% EBITDA, I will tell you that you cannot grow. You are not creating enough capital resources out of that business at 2% to enable growth. because there's only three places that you're going to get capital. You're going to earn it, you're going to borrow it, or you're going to have investors provide it. And now what's interesting about that, borrowing and getting investors all depends upon how much you're earning. So go fix earnings first.
That makes sense. Makes total sense. And that's definitely really good, solid advice. Now, you mentioned you are a fan of processes, and processes are important for a business. Tell me more about that. Tell me more from your experience, how processes can actually drive profitability.
So the best way that I think about processes is distraction. So when you have broken processes, you have accelerated and accentuated distractions. So one thing that I'd love to do, like we were working with a construction company, and the construction company was going on about they were wildly underperforming. And so we brought in all their project managers who did nothing but have a whine fest about all the things that were jacked up.
And you're not talking about drinking wine.
No, we're talking about whining like a school child to their parents or something. And so we were talking to them, and they're like, "Oh, this is so horrible. I'm spending all this time trying to get contractors and subcontractors and materials to the job. I'm on the phone probably 2 days a week just chasing people to get to the job and do the job." So, well, why is that? It's like, we're not able to pay anybody. And so we're always, we can't pay them. We're not paying them. So I got to chase them all the time, make promises, blah, blah, blah. And I said, so what if I eliminated that problem and gave you those 2 days back? How much better would you be able to manage your jobs? And they go, well, if I could focus 2 more days on the job, all the chaos in the job goes away because now I can focus on executing instead of chasing. And as we peeled that onion back, you know what the root cause truly was? Their billing process was so jacked up that it was creating a collection cycle that was 90 to 120 days before they got their money.
Interesting.
And when we fixed that and got everybody trained on it, their 90 to 120 days went down to 35 days.
Fascinating.
And all the extra cash that was created, systemically created, they quickly were able to pay down all their AP. All those contractors and vendors were happy to participate in the jobs. But most importantly, now the project managers could focus on managing the project versus chasing the chaos.
Right.
That's
right. That is a fantastic point, Burt, because it's the point of you're increasing the efficiency because you fix what is not, like there is something that is blocking, you remove the bottlenecks. So then there is a flow. So you're definitely fixing it there, but then you also create opportunity. And sometimes people don't look at the missed opportunities as a source of revenue as well, because it's not just improving the efficiency, it's also creating the time that can be utilized in order to create and drive income producing activities.
It's another example of what we do all the time, because if you look at the average entrepreneur, they are visual or tactile learners, which also means if I put a big stack of spreadsheets in front of them, I've lost them.
Right.
So we do a lot of financial charting, graphing, trending, and everything else. But what we teach them is when we're looking at your trend lines, you'll see a certain pattern that is historically true between various data points. As soon as that pattern changes, I will tell them, you need to ask 3 questions. Did a person change inside the company? New employee, old employee left, whatever, or vendor or customer person changed? Did a process change? Or did a system change? Because those pattern breaks will tell you instantly one of those 3 changed, and you need to go ask those questions. But the first 2 are the most likely, because system changes are very infrequent, that somebody changed a process or stopped adhering to a process, or the people didn't understand the process and weren't trained on it, and suddenly all those patterns broke.
Yes, and it's the people, process, and technology or tools, and the technology, as you said, the systems, it will be, if that changes, then it's known because, we're going to go into a new CRM, or we are doing this. But the process, it also combines the process, people, and the technology, because they can stop using the system, which is part of people or part of process. So I agree, that is definitely a key component that has to be taken into account.
And one of the other things that we preach all the time, Adi, and if I'm preaching too much to you right now, you can tell me to stop.
No, but our listeners love to hear that because
Okay.
you are definitely giving them such wisdom that is very usable. So go ahead.
Well, and the other thing that we remind people of on their financials is like, hey, look, when you look at your financials, I want you to know that all your financials are is a historical reflection of your people, behaviors, decisions, processes, and systems. That's it. So if you really want to change your financial performance, I don't give a flip about your strategy. You have to step back and ascertain, how do I change my people, their behaviors, their decisions, processes, and systems? Because it's all about the people and them executing sustainably that will change your numbers. And if you don't step back on that, whether it's a new market that you're going to enter, a new product line that you're going to launch, or whatever, if you don't step back and says, how did the people make those changes, and do so in a way in which they can do it again and again and again, you're going to fail.
You are. Absolutely.
Your numbers are actually going to look worse than they did last year because you tried a riskier proposition without knowing what good looks like.
That's exactly right. That is a very, very, very good point. Now, Burt, you and your team also work with businesses in order to prepare them for exit, to prepare the business for exit. What are the key components to prepare a business truly to exit successfully?
That's a great question. First and foremost is you as the business owner. You need to step back and says, how much this business is driven by you?
That's right.
Right. And if it's too much, I will tell you that you have a great job. You may not have a business. I'd say I face the same problem with New Life because I do most of the business development at New Life, which sounds great for my ego. It's horrible for my business.
You're absolutely right. I mean, I did the same thing with me. I mean, I did not start scaling until I took my own medicine and I actually start documenting, because that's what we do. We write processes, but we also do knowledge transfer. And that's my favorite, to do knowledge transfer with the founder, because I love when people tell me, oh, no, this is something that only I can do. I mean, I started a business. Because you know why I like it so much? Burt, because I was in the same boat. I was like, well, no, I'm the only one who knows how to consult the clients. And I know, I mean, how am I ever going to even, and I go like, wait a second, what am I saying? It's not, if that's the case, then I have a job and not a business. Right. And when I start documenting and I started recording and really figuring out what is it that I'm doing, and I can now have 5 consultants that replicate me, and I don't consult clients directly anymore. The same thing with the business development, with sales. I recorded my sales presentations until I was actually able to distill what is it that I'm saying or how am I building it so somebody else can replicate it. So you're absolutely right. It is, first of all, starts with the business owner and the decision that it can be made and that somebody else can do the job.
Yep. Because if you can't pull yourself out of the business, so here's 2 tests. Pull yourself out of the business, and would it continue to be as successful or continue to grow as it would? If it would, you have a good model. If it doesn't, you have a big problem.
Right.
Here's the other thing. If you're really thinking about exiting, maybe in the next 2 years, take a sabbatical. Go away for 3 months. See what happens. Mm-hmm. You'll find out whether or not your business model is really sustainable. And that's also a great story to tell at the closing and due diligence process. No. This isn't some story I'm telling you. I left for 3 months and look what happened in those 3 months. That's a great test.
Yeah.
The other thing that's really important for people exiting their business, there's 3 or 4 more. Go back to the composition of your revenue. Do you really understand the compositions of your revenues and really the compositions of your margins, and which one of those margin streams is wildly more valuable than the other? Volatility in these revenue streams, volatility in your margin percents, not good. Because volatility, especially in your gross margin percent, says one of 3 things. It says you don't know how to estimate your product and services. You don't know how to execute your product and services. You have really bad administrative and accounting processes that's creating financial volatility that dilutes decision-making.
Yeah.
None of those are good, right? So understanding that. And then the last thing that really drives tremendous value, and you're going to like this answer a lot, Adi, it is processes. Your ability to execute well on an ongoing systemic basis and prove that out is hugely important, because when you can prove that out, you're likely going to be able to then prove the data points about how sticky are my customers and why. What's my ability to increase my margins on my customers and why? Because let's face it, very few companies will fire an outstanding service provider because you went up in price. But they will fire you in a heartbeat if you cannot execute well, because now you're placing their operations at risk.
Right.
So great processes create great stickiness to customers, whether you are a project-based company or not. And it ends up being tremendous value to your customers. Back when I had my construction company, we developed a process that we called In Touch, In Time for You. And what it was a lift off mechanism. Like, we were supposed to start installation on July 5th. We backed up everything that we had to do for the 3 months before we were on site, between, okay, drawings are finalized, submittals are approved, blah, 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 blah. And we had a timeline that was predetermined to guarantee success at that deal. And we reported that back out to our GCs all the time, whether we were on track or not. It was total disclosure, with one caveat. The GC had to affirm my start date all the time to get that data. So if they ever moved up my start date, then I got a change order, because now they're changing my life and I'm having to do some really incredible things. But it also showed that you don't have to worry about me, because I'm controlling the things that you're concerned about that I'll miss to be on your job site, which makes me different from everybody else that you talk to, and makes me a higher level of confidence for you to want to deal with me. And what ends up is I get those calls at the end of the job going, Burt, we really want you on the job. We want resource on the job. You're a little bit high. Can you sharpen your pencil? And that's the call you want.
You do. Absolutely. Absolutely. And again, it cannot just be that's what makes the business really valuable.
Absolutely. Absolutely. And people think, I need more revenue on that bad foundation. I guarantee you're going to blow up your company, and it's not going to be valuable.
That's exactly right. Exactly. Burt, this has been an amazing conversation. It's definitely, you shine through your wisdom and your knowledge, but it's based on experience. You walk the walk. You don't just talk the talk, and you're there to help business owners be more successful and perhaps avoid, the pitfalls you had to go through, but also get inspired by you, because we all go through things, and it's how you process the issue, how you handle it, and your attitude, your outlook, and the actions that you take, which are the most important. And having somebody on their side to guide them through the actions that they have to take gives the stability and the confidence that everything is going to be okay.
It's really interesting. Well, thank you very much. Let me say that. So it was a great compliment. But what's really interesting, Adi, is I am so much smarter because of the scars on my back than I ever am about the successes that I've encountered. And so part of my wisdom and this smile comes from, oh, I can help you avoid these same scars, but we're going to talk about them, right? Because for us, one of our mantras is when we have CFOs that go into a boardroom, I tell them all the time, it's like, you never, ever, ever go in that boardroom as a subordinate to anyone, right? You are a peer to the CEO every time you enter that room, because you, more so than anyone else, has to have the big girl conversations with that person and tell them the king has no clothes on, right? This is a bad decision, and we're going to arm wrestle over it until we come up with either agreeing that your decision is right or a new decision. Because in our mantra, the worst conversation is that one not being had.
That is exactly right. And that's the responsibility and the accountability. That's to be able to be accountable, is you have to be able to talk about your actions and explain the actions. And if you do not hold your integrity and know what is right and hold to what is right, you won't be able to be accountable. And that's what you look at a CFO for. That's why you have a CFO. So there will be somebody there to guide you. And you and I talked about it at the beginning. when we were chatting before the show, is we don't want to work with clients that don't get it. We want to work with clients that want to succeed, that want to grow, that are doing something good for the world around them, whatever it is. I mean, whatever they manufacture, whatever they build, they are helping others, but we are there to help them, but they also want the help. If they don't want the help or don't want to listen and they're there to argue, then it's a problem. I mean, of course, argue is not bad. I mean, people should have their opinions and make sure that they're not just saying, yes, sir, and that's it, because they might have a valid viewpoint that we didn't look at. But the beauty of it is the combination of those viewpoints get us the final result that we can apply.
Absolutely. Absolutely. And we actually use some tools up front to assess, can you make a decision? Who in this room is truly the decision maker, not trying to manipulate, but trying to connect a CEO who may not be able to make hard decisions to their partner in the room that they rely on to says it's okay. And we're very open on that, right? We are. It's like, we know that Bob really needs to be present to help Jill. And so if Jill needs to make a decision, we're going to make sure that Bob's in the room and that we're talking to both of them. Right. Because Jill may not trust me, but she does Bob. And if we can get those parties together, it's very important. But we also will challenge, if I prove to you that the moon is made out of cheese, are you going to take a bite? Because if the answer is no, then let's not dance. I mean, it's just, I already have enough gray hairs, Adi. I don't need to have any more for people that don't want to move forward.
That's exactly right. Exactly right. Good. Well, Burt, if people want to know more about you, they want to talk to you, they want to learn more about your firm and your services, which they should, how can they contact you?
Well, first and foremost, on our website, we have a contact us form, which is a great way to go into it. It may feel a little impersonal, but if you want to reach out to me directly, my email address is burtc. Let's use this one because it less comes into this email box. burt.copeland@newlifecfo.com, or my phone number is 214-315-2275. But I'll encourage you to text me first, because I have a bunch of spam filters on my phone. I don't want you going into that spam filter.
Great. Awesome. Well, thank you for sharing your phone number, email address, and the website. And definitely to our listeners, go and check it out. Everyone needs financial support, and the CFO that is there on their sides, guiding and directing them. And as you can see from this conversation with Burt, definitely Burt and his firm are there to help you. So thank you so much, Burt, for being a guest on this podcast. It's been a great conversation.
And indeed, thanks so much for this opportunity. It's been delightful to get to know you better.
Thank you.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.